Good morning. A little bit of fatigue seems to be creeping into the Indian markets, at least for the time being, even as their overseas counterparts are enjoying the extended rally. September was spectacular in India. October and November were not so kind. In December, we somehow managed to claw our way back. But early in January, the market seems to be lacking the spark again. The road ahead is murky and there are no clear answers on which way the cookie will crumble for the Indian markets. The short-term direction will hinge on global cues, quarterly earnings, and the outcome of RBI's policy meeting. The start today will be down as the US stocks closed mixed and the key Asian markets are in red. European markets rose anew with UK's FTSE pacing the advance. The broad range for the Nifty appears to be 6,000 to 6,300. It could be stuck between 6,100 to 6,200 in the immediate future. A close below 6,115 could result in selling pressure. Individual stocks, especially outside the main indices, will hog the limelight, but beware of the volatility of the small cap and the mid cap stocks. Do your homework well before committing money, lest you will repent your move. L&T could see some action amid reports of business structuring. Suzlon might also remain in the spotlight on reports of a possible stake sale by its promoters. Fertilizer company will be in focus ahead of the GOM on urea decontrol. Sale in ONGC disinvestment is on track, says the disinvestment secretary. Tata Steel is planning to raise $1 billion from a GDR issue. Ranbaxy and Merck have reportedly terminated their deal. Natco Pharma is in talk with Pfizer for the Pfizer's HIV drug. FIIs were net buyers of Rs 7.17 billion in the cash segment on Tuesday, according to the provisional NSE data. The domestic institutional investors were net sellers of Rs 4.91 billion. FIIs were net sellers of Rs 2.46 billion in the F&O segment on the same day. The foreign funds were net buyers of Rs 4.27 billion in the cash segment on Monday, according to the SEBI website. Strong differences have emerged between NMDC and MMTC over the long-term supply pact of the iron ore to Japanese mills. ONGC and GAIL reached an understanding of mutual business growth covering natural gas and petrochemicals. And to our recommendations, the technical calls for the day are: we recommend traders to buy Exide Industry above Rs 172 with stop loss of Rs 168 and a target price of Rs 178. We advise buying Natco Pharma above Rs 319 with the stop loss placed at Rs 309 and the target price of Rs 339. Our derivative strategy for the day are: long BRFL January futures in the range of Rs 207 to Rs 208 for the target price of Rs 215 and the stop loss placed at Rs 203. Long Colgate Palmolive January futures in the range of Rs 874 to Rs 877 for the target price of Rs 894 and a stop loss placed at Rs 864. Thank you. Have a great day ahead.